Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the market correction that took place today. Today is 15 November 2017. The last time I recorded a market correction where all three indexes had fallen was back on 12 October 2017. I make these videos for kind of historical references when we have these pullbacks. There's no real reason for a lot of these pullbacks. They just take place because week after week where we're hitting record highs. So this is completely normal, and I always make these videos just to kind of track this sort of, the pullback that takes place, because you can kind of time it. The last one that took place was around 12 October 17. Today is 15 November 17, so it's been a little bit over a month, like 2 days, 3 days over a month. So the last time we talked about, we had a pullback, and it was around 0.17%, 0.16%, 0.17% on the E3 indexes. My portfolio had taken a dive of 0.28, so my portfolio always takes a little bit more. Mine's a little bit not as diversified, of course, as the indexes, and it does have a little bit riskier stocks in there. So we also took a look at AT&T. They were at $35.86. They had a lot of selling taking place here, so their stock did fall down into the $32 range. So we'll also take a look again at AT&T and something that's coming up in the future for them, and hope that, they're really hoping that this is going to really help them out, and I think it will. And of course, if you are brand new to my channel, I do make stock market financial videos and all sorts of dividend videos, related videos. I also post over to my discussion portion of my YouTube channels, interesting articles that I read throughout the day, such as the GE cut that took place 2 days ago, the Target falling down 10% today. I don't touch retail myself. I still find it really interesting that such, it's retail. So Procter Gamble, they did they did a recount for Trian, and he actually won a seat at the board, and he put out these plans back in September that he really wants to turn Procter & Gamble around and make their revenue, he wants to turn their company around, make their company more profitable. So this stock did quite a bit of a jump here in the after hours. Cisco, they released their first quarter earnings, blew it out of the, they beat their EPS by 0.1. You know what, we're going to go ahead and cover that here in just a second. So, and then I thought that was a really interesting article on REITs that have track records for increasing their dividends. With my Roth IRA getting built up right now, I'm really interested in tax preserving any sort of dividends and capital appreciation, and I would love to have a whole bunch of REITs inside of my Roth IRA that's getting paid out every single month, and I'll have to worry about taxes on. So the last time we covered the indexes on CNN, I figured this would be a really nice way to actually see that my portfolio took a huge kick here in comparison to what it took last time. So everything took a bit of, multiply everything that you lost last time by 3. We said that the average last time was 0.16, and if we multiply it 0.16 by 3, you get around 0.5, somewhere in that range. So the Dow dropped 0.59, the Nasdaq fell 0.47, and the S&P 500 dropped by 0.55. Now I did drop 0.28 last time, so 0.28 by 3 is a little over 75, but today I did lose 0.74% of my actual capital appreciation. You see I am up slightly, and that's all, all gravy. But I'm not in it for the capital appreciation. It is nice to have capital appreciation, but that just makes all the stocks that I'm investing for my dividends cost more, and I can't buy as many shares in order to get paid out more. So you can actually see here that I'm actually pending $91.94. Verizon and AT&T has already paid me over, I believe it was $90 or $100, somewhere in that range. Lowe's is paying me, EPR, Paychecks, and I think there's a couple other ones. So already, I've already been paid somewhere near $200 in just dividends. So I don't have to worry about my capital appreciation. I'm getting paid out, and then I'm going to be reinvesting that money into some of the few stocks that I'm actually down on. So I am down on AT&T, CenturyLink, EPR, and I am looking to probably add O and EPR into my Roth IRA. They are down, so it's actually a good opportunity where I did my research on them. I bought into them. They fell down. That just means I get to buy more at a cheaper discount. Same with CenturyLink and AT&T. My actual equity in CenturyLink is much less than it is in some of my other positions, and I may end up adding more to CenturyLink just because they're actually set up as a buy right now. Same with EPR. I do believe going forward CenturyLink is going to be really pulling it together with their merger with Level 3. Level 3 management coming up on top. They're going to be thinning it out and really changing it to kind of revolve and move upwards. Now, one other interesting thing was Procter Gamble. So we talked a little bit about this. So Trian, I don't know how to pronounce his name. Anyways, they recounted the proxy recount, and he wanted a position at the board where he can make a vote. And he actually, they did the recount, and he actually got a seat at the board. Their stock in the after hours jumped up by 3.5%. This was mainly due to back in September. If you read a little bit about him, he had brought up like a proposition in order to increase revenue within Procter & Gamble. The stock, the investors themselves are very happy. Procter & Gamble's been sort of stagnant in the last couple of years, so you can see here through probably a lot of the discussion that a lot of the investors are probably really hanging on to the stock, and they want to cut Procter & Gamble's dividend by 50%. Now, I don't think it's going to be happening, but I think they're going to be really helping out the stock and kind of thinning it out and pushing it forward where it needs to be. L Brands took a huge dive today. I'd looked into L Brands in the past. Being a dividend investor, I'm always interested in dividend stocks. Some stocks that are cheaper and easy to invest in and kind of build. You can get capital appreciation, but I don't see L Brands keeping their dividend for the long term. I don't see them. You want to have dividends, and you want your capital appreciation to kind of sit. You don't want the stock to fall a huge amount. You don't want it to grow a huge amount. You want it to kind of mellow like AT&T and Verizon, where you're just kind of getting paid out dividends. Your money's sitting there, and it's a safety. I have some growth stocks such as Microsoft and such, but for the most part, I like to have a few stocks that are pretty stagnant and just pay out really nice dividends. L Brands is not that. So they had a loss, and they cut their I think it was like their bikini sector or swimsuit sector. They cut that out. They had actually lost and expected. They dropped their future earning potential lower than expected. So they had an earnings per share of $1.95 to $2.10 versus the $2.03 consensus. So they had actually dropped what they were looking to expect during the fourth quarter, or the holiday. So that's pretty big, and they actually dropped by 3.49 in the after hours. And Cisco is one of my stocks. I'm actually very happy that it's kind of going this way. They're transitioning from being a hardware hardware company where they're only they're pushing out routers, switches, all their equipment out, and they're transitioning it over to security and services. So Cisco, their stock jumped up, I believe it was actually more than 3.9%. If we go over to Cisco stock and check this out, they are up in the after hours by over 5.8%. So very nice growth in the after hours. Their revenue fell by 2%, but the main piece here that I was looking at, so their product had fallen down by 2.7%. Their services were up by 1%. Their revenue across the board were kind of down throughout the Americas, EMEA, and APAC. I'm not sure what those abbreviations were. And then revenue, products and services, their infrastructure platforms was down, but their applications were up. Their security was up by 6%, and something on their other was down by 16%. So I'm more focused on their security. They're really pumping out Cisco products meant for security, such as Stealth Watch. They have Cisco ICE. Being in the as a systems engineer in my telecommunications field, we actually use only Cisco in our products and infrastructure, and we have Cisco ICE being rolled out, we have Cisco StealthWatch, we have a couple other Cisco products being rolled out. So I'm looking at security as moving up as a lot of other corporate businesses and other businesses move towards, everybody out there, if their infrastructure is probably made from Cisco, so they're more likely to choose Cisco in the security and beefing up their network, and that's going to drive their security sector up going forward and their services. So I do see Cisco jumping in the future, going very nicely, and that is it there. Now, as far as AT&T, let's go ahead and punch in AT&T stock. So AT&T is currently sitting at $33.81 compared to where it was about a month ago at $35.86. So it is at a very good opportunity right now. Now, one thing that they're looking forward to is they're definitely trying to finish up that Time Warner and the delay that's been taking place. They thought it was all gravy, but obviously the government kind of stepped in and they kind of postponed that for now. But AT&T and their shareholders are kind of holding on to their seat for the weekend of the Justice League release. So Warner Brothers is supposed to be releasing the Justice League here soon, and they've actually done really well with Wonder Woman. I think out of all the movies that I watched, Superman versus Batman, Superman, Wonder Woman was the only one that really stood out, and kind of, I've watched it multiple times. I thought it was really interesting. I like the story behind it and just the film work itself. So there are kind of mixed feelings on it. So early reactions to the film is mixed, but shareholders will know more once audiences have a chance to weigh in. So they are definitely looking forward to this coming in and bringing up some of their $1 million stuff. So this could, after all, the global tally is upwards of 325 million, including international haul that's tracking has averaged above 200 million. So they are looking for this film to really hit track numbers and bring in that money. So let's go ahead and root for that. And that is it for this video. So I basically wanted to cover the market correction that took place today with the numbers, talk a little bit about Procter Gamble, a little bit about L Brands, Cisco going forward, and AT&T going forward. I'm a shareholder of both Cisco and AT&T, and I would like to buy into Procter & Gamble, but I still think they're really expensive and their revenue needs to increase. But that is it for this video. If you have watched up to this point, go ahead and hit the like button below if you did enjoy the video. Please remember to subscribe if you are brand new to my channel. If you have any questions about anything that was covered, or if you want, a link to an article that I kind of covered today, go ahead and leave that in the description below, and I'll get that information for you. And of course, thank you for watching, and I will see you next time. Have a great day, guys. Bye bye.